This is WPSL Port St. Lucie, the talk of the Treasure Coast.
Well, it is a brand new year. That means Charles Moskowitz is back with his, boy, he's got a nice crystal ball there, whole thing. He's doing it up right. Good morning, Charles.
How are you?
Doing okay. How are you?
Okay. Just a little housekeeping first. Since I haven't been on since last year, this is the performance for the last 5 years. As you can see, this year was a bit of a disappointment, but still versus the averages and the S&P, 45%, pretty decent. And right now we are literally, this is our trade ledger, and we have a bunch of closed out trades, 7 of 7. We've gone 7 for 7, and we are up 11% year to date already. So that's a pretty substantial gain. I feel like I ought to be annualizing it out, sending out the information and closing it down for the year.
I'm sorry, I want 20% or nothing.
Say again?
I want 20% or nothing.
Well, annualized it is. Annualized it's, 132%.
Yeah, there you go. Oh,
and,
man.
We have Dennis with us today. And also in the second half, I want to mention, we have Joe Moscato. We've had him on before with Generex, and their stock has just exploded the last week or so. And it's, well, I'm going to show it to you. Where are we? Okay, share screen. This is a chart of his stock. It had a great consolidation from the end of last year, trading between about a quarter and about 35 cents. And today we're trading 48.5 cents. It's up 3 cents today. It was up pretty substantially yesterday. Yesterday it was up 15 cents or 60%. And today it's up an additional 21%. So that's a pretty amazing looking move. And of course, Joe will give us an update on what they're doing and what has caused this tremendous rally in the last couple of days.
Boy, that's tremendous. Wow. That is amazing.
And of course, we have Dennis to talk about futures trading. And Dennis, why don't you discuss just a little bit about the advantages in dealing with futures as opposed to the way that I do it for most of my people, which is I have a bent or an attitude about what a future is going to do, and then I have to convert it to an ETF that tracks that. And clearly it's not as good a tracking mechanism as being long or short in the actual futures market.
Well, first of all, Charlie, congratulations on your good performance over the years. You consistently do well. Well, the futures market is huge now. I follow about 30 markets. I don't know how many stocks there are, 5,000, 10. So I really never miss the opportunity to go long ago. So my software alone costs $13.50 a month. I could get much cheaper ones. I think the advantage to the futures is the fact that trading 23 hours a day, other than where you don't have the protection over a weekend, when the markets close on Friday night at 4 o'clock and don't open until 6 on Sunday Eastern time, you really can't get hurt with some news coming out other than the 1 hour of the 24. So that's a great advantage. The other thing too is the leverage. If you use the leverage right, it's a huge advantage. I mean, if you think almost everybody buys a house on a mortgage, they buy a $500,000 house and they put $100,000 down. So they're leveraging 80%, but they got to pay interest on the leverage. Now, if they sell the house for $600,000 and they only put $100,000 down and it was $500,000, they actually doubled their money. So in the futures market, you use the leverage the same way and you protect it by using stops. But the nice thing is you don't have to pay any interest on the leverage. So I think that's a huge advantage. And I think that in normal, I don't think we're in normal times. I mean, here I am up in my age now. And Charlie, I never thought I would get surprised by so much, but I am. But what we're getting here now is the inflation. I mean, just start looking at the grains, the sugar, the cotton. Cotton's the stuff that you wear or goes into your linens. And we're starting to harden in interest rates. I think the markets now that really look defined, I think natural gas has a huge potential upside. I think the bonds have had it. I mean, I don't know if we'll ever see bonds, a 10-year note down to 0.5% And I really, as you know, like platinum. Platinum's below the price of gold. There's a deficit of it. So it works out well. But the main thing is you got to work with stops and you got to wait for your pitch. In other words, like Ted Williams up in your area, he a 400 hit. Wasn't he was a 400 hitter, right?
Yep.
Yeah, well, he said, he waited for his pitch. You don't have to hit it, everything. But I think it's going to be really exciting. And when this market rolls over, and I would have thought it would have already by now, I think you will not believe what futures are going to do. Now, when you look at the market, Charlie, and I know that you follow it so closely, I mean, it's out of sight. I mean, last year, how much was the NASDAQ? Up 60%, the S&P up 15%. You outperformed that. There were 200 stocks in the S&P that went down. That's 40% of the market. I mean, I never seen anything like that. I haven't. I don't know if you have. And, now you have the VIX even now. The VIX had gotten down to about 10. Now you have all-time highs in the stock indices, and the VIX is still at 23. I think Tesla's over 1,000. I think I told you yesterday, 109. It's over 1,000. Now, please tell me, because maybe I become senile, which I don't think has happened. How are they going to bring their earnings up to match that? Now, Tesla is a great car. I think Elon Musk is a really smart man. He's the richest man in the world now. But how could that company be worth more than all the other automotive companies combined?
Well, we've had this discussion before. I think, Tesla is more an energy company than it is a car company. And that is a dramatic sized market. I mean, the energy market, which includes all the utilities and everything, that's 1,000 times bigger than the automobile market. And so I think that it's also being valued on that. And, I don't know whether it's going to be like Amazon was, but we heard the same thing with Amazon, before it had any earnings also. And that actually was up until about 2 years ago. And that stock has, really performed also. So, I take a wait and see. I haven't traded Tesla in 2.5 years. So it's not one that I'm comfortable with because you can have some pretty serious downdrafts in it. I mean, we saw that the day before yesterday, it was 880. And then last night, it was 800 again. Today it's 861 and it's up $50. So, I'm not sure that we're going to have that same kind of move, but it does happen from time to time that things get this warped. And of course, you have all of these new traders who started with, a couple of $1,000s when they were getting PUA funds from the government because of the pandemic relief program. And they piled into Robinhood. Robinhood opened a couple of million accounts last year. And the stocks that they bought were simple. They bought Facebook, they bought Tesla, they bought Amazon. They bought the things that they knew. And that's an old Peter Lynch, who was really the founding force at Fidelity. He always said, trade what you know. So, you're talking about millennials, and you're talking about people who were earning good money, and then all of a sudden, they're getting this income from the government, and they figure it's riskless, and they pile in. And so, some of the time it's worked out, some of the time it hasn't worked out. But this is clearly the tremendous amount of liquidity sloshing around. And, as long as there are people who listen to nothing but the headlines, Tesla's just one of those stocks. It's not like Amazon was, because Amazon was selling and delivering stuff, but Amazon had no cost to finance, whereas Tesla has. It's been diluted, but Amazon, I mean, you think about it, you go on Amazon, you buy something, they take the money. They don't pay the vendor for that for probably 30 or 60 days. So in fact, they don't have a cost to operate that from the interest side. They actually are earning interest on your money for, a month or 60 days. And so that was really an unusual situation. Tesla raises money, they issue more stock, the stock gets more and more diluted. That's the cycle. And, we just haven't reached the point where that cycle has become important.
Yeah, well,
Charles,
Charlie,
CNBC,
I'm sorry.
That's all right, Dave. CNBC says Tesla is a technology company. So
I agree.
You're saying it's an energy company.
Well, it's the technology for energy. It's the storage of power. A couple of years ago, there's a company called Generac, not to be confused with Generex, who's on at 11:30. But they're putting these storage. They're selling the customer the solar panels. They're routing it into their garage, into their storage unit, and people are dramatically reducing their cost of energy. And clearly, Tesla is doing a great deal of that business. This is not like Generac, where you have, either a propane or fuel oil or whatever to run it. This is running off the sun. This is running off, all forms of solar power and wind power, etc. They're harnessing all that, and they're storing it for you in your garage, in something that hangs on the wall that's the size of, a big flat screen TV. And so, what's it cost them to do that? What's the cost of goods sold?
Okay, now I agree with both of you. However, I try to keep life simple. And there's so many other stocks out there that I believe has a better risk reward. Let me give you two prefaces that I'll take to my grave. Baron Rothschild was the wealthiest man, I think, in the world in the 1800s. And they asked him, Greg and Charlie, they said, look how much money you made. You're a smart guy. He said, I'm not smart. I was just lucky. I always sold early. And Greg, I know you know this. You've been around a while. As you know, the bulls make monies and the bears make money and the pigs and hogs go to the slaughterhouse. Now, this is not the time to be in Tesla. It's not the time to be in stocks now that are selling for 30 PEs. I mean, the market is putting in perfection here. But, whatever it is, I wasn't in it. I was lucky enough, and Charlie helped me. I caught some of the Bitcoin stocks, and I want to give Charlie credit for it. I bought a stock called Riot at 1.5. It's now about 25. It's a Colorado company. I'm also, as Charlie and I are in, we're in some platinum stocks like Impala. I'd rather be in things that have a better risk reward, but I mean, I wouldn't go near Tesla. Let me give you one more analogy, and I'll reserve my case. Here's an analogy, all right? My brother, my fraternity brother, is the president and CEO of General Motors, and I also christened his son. Anyway, he calls me up and says, Dennis, I can't believe it. Do you know that the unions have decided to never strike again? You know what that means to our bottom line? And everybody out there now is going to accept a black car. In other words, this is going to be incredible for, great news. So I call up my local broker in Merrill Lynch, and I say to him, I want to sell all my GM stock in about 2 or 3 days. Let's let the news hit, let them go crazy, and then let's get out. He says, what are you, crazy? He said, the news is so good. I said, well, if the news is that good, from here on in, it could only get worse. And that's the way I feel about Tesla. And Charlie, you're more astute than I am. There's going to come a time where they're not going to be able to get this cheap money. The Fed's going to have huge problems with this deficit and inflation. So when the money runs out for them to finance, that may be a problem for, and I don't wish them ill. I happen to like Musk a lot, but that's the way I feel.
Yeah. Well, I agree with you, and it is a touch excessive, and it's been a touch excessive for 200%. So while I'm not willing to take the amount of risk involved, and in fact, you also brought up a very interesting point with the Bitcoin. On Friday, Bitcoin traded 42,000, almost 43,000. And yesterday it hit 31,000. That's a 30% decline overnight. I mean, that's a lot of risk. And frankly, it's not the kind of risk that I feel like I can take. I'm in that grayscale Bitcoin trust, and I've been trading it since it was $7. I have 200 shares left. It's trading at 39.5 today, up $2.06, because Bitcoin is higher today after that pullback. But I absolutely agree. It's just the timing of it. You hear people talking about housing, and you hear them talking about great mortgage rates, this has been a bull market in the bonds to the upside since 1981. Give you an idea, today's bonds, which sell at 167, 168 for the 30-year bond, with a yield of about 0.5, a 0.70 in that area. You know, people were still buying homes in 1981 when those bonds were selling at 60. So you're talking about a move from 60, which is the equivalent in a bond of $600 face value for a $1,000 bond, to now being at a premium of 168. So a $68 guaranteed loss if you buy them here and hold them to maturity. So, you know, that's a problem. But back in 1981, when people were still buying houses, that 30-year bond was yielding 14.25%.
Well, I'll tell you the luckiest.
14.25%.
I'll tell you the luckiest thing I ever did. I was living out west in Lake Tahoe, trading there, and the 30-year bond was 13.3. And I was lucky. I went into my bank. I did a sizable investment. And in those days, Charlie, they gave us coupons.
Yeah.
And every 6 months, I would run the coupon, cut it off, bring it in and get the money. 13.3. I mean, the stock market hasn't even averaged 13.3 over the years. But unfortunately, it ran out after 30 years. But, you know, look at it. We had a 10-year note down to half of 1%. You know, 0.50.
And it's now about 1.1%, 1.1.5.
If I look, I'm telling you, I think they are going to be so surprised with inflation. I mean, we could see potentially a 3% 10-year note by sometime next year, but we shall see. But certainly interest rates look like they're ready to harden. And look at the inflation and look at the deficit. I mean, look, I don't think that you have to be a rocket scientist to figure that out.
Right. Well, I'll tell you something else, and people don't really know it because they don't follow it like you or I do. But, you know, all the information that comes out from the Fed about what they're expecting and what they're expecting next year and what they're expecting for interest rates and how they're going to hold interest rates low and there's no inflation, that's a bunch of crap. Plenty of inflation. All you got to do is go to a grocery store to see it. And number two, they're wrong. They've been wrong. They have a terrible track record. I mean, if their mandate is full employment and 2% inflation, they've been wrong for 20 years. So, you know, they may be an authority figure and people may see how the market moves, which gives them just that much more credibility. They say something, the market moves one direction or the other. But the fact of the matter remains, they've been wrong.
Charlie, they're probably wrong 84%.
And people have to be aware of that.
Well, they're probably wrong 84% of the time. Yeah. But the thing is that they cannot control the long part of the interest rate market.
No, they can only handle the very short end.
Charlie, wait till you see at some point, this is a prediction and time tells all. I'm sometimes wrong with my predictions. Wait till you see the bond vigilantes come in. I mean, if the Fed continues to be this irresponsible with the deficit and this low interest rate, it's going to cause all these bubbles. The bond vigilantes will come in sometimes in the next 6 to 18 months and just take the bond and the note market apart, which will affect the stock market if it happens.
So how are my 1 million shares of S&H green stamps coming?
Yeah. You still collecting those? Okay, I see we have Joe with us, which is really a treat considering that I'm going to put the chart up on the screen for a second here. And we could not have a better time to have Joe on This is GNBT. It was coming down last year, same thing as everybody else, from the highs in early in the year, came down, has been consolidating now since the end of September. As I mentioned before, between a low of about 18 cents and a high of about 26 cents. And then all of a sudden, we started seeing some big volume back here the last day of the year, and the stock moved that day from 18 to 23 cents, and then has been consolidating across until yesterday, when it burst to the upside on 2.6 million in volume, which is, that's these bottom lines. You can see how the volume has come in in spots, but generally it's in this range of a couple of hundred or 400,000. Yesterday, 2.6 million on the upside by 60%. Today, up an additional 19.7%, and we've already traded 1.5 million shares. So I think that I'd like to turn this over to Joe, and he can talk to us about, what has been going on and, what we are seeing.
How you doing, guys? It's good to be back. Nice to be with you guys.
Always a pleasure to have you, Joe.
Yeah, Joe,
Thank
after looking at those charts, what have you done for us lately?
I got to tell you,
Outstanding.
We've had a lot of downside pressure over the last year, mainly because of the position that we were in regard to how we were raising money. And unfortunately, you raise money and not all these funds take care of you the proper way. And we're over that. We've gotten rid of all of our convertible notes now. We've gotten rid of all of our, let's call them dubious players that, consistently bring you down. And we're over all that. So we've just been working very hard on the hot area that we're involved with, which is creating the COVID vaccine. And we've made incredible strides in realizing a vaccine that is completely safe, very highly effective on long-term memory. So you won't need vaccine over and over and over again, like it's looking with the other players. We have substantial data in that area that proves that our vaccines give, more than 10 years in protection, which is really what's needed here with this COVID-19. And, all the other testing has gone on exceptionally well. And we will have our final data come out at the end of this month to very, very early February, which we believe we're going to surprise everyone in regard to our results.
Boy, that's great.
Now, didn't you just sign a particularly large deal with Malaysia and China on the vaccine deal?
Yes, we signed two substantial deals. One with Malaysia. Malaysia is a great deal for us because, they want the vaccine there. They want the safest vaccine possible, and we believe, based upon our data, that that's for sure we have. So Malaysia is paying for our clinical trial work and all of our expenses here to get.
Well, that's a home run.
Oh, yeah.
That's a home run to not have to do by raising more money, to move it forward.
Well, the key is they're going to pay for our, approvals here to get it approved here in the United States. So we get two bites at the apple this way. We get the United States on their dime, as well as once it's approved here, then it'll be a very quick pathway to get approval in Malaysia as well as the other territories that they licensed. And, that for us is just huge because we'll have it approved in two countries. Well, many more than two countries because they have, many countries in Southeast Asia that they have the license for. So yeah. We get approval here, they get it approved there. Now we have two major population areas where our vaccine will go. as well as China, which is a very large deal for us because it's everything. And China wants to do extensive work in other infectious diseases, as well as swine flu, as well as put our key technology in their influenza uh, vaccine that's given yearly. They believe that our key will make their vaccines much, much better, much, much stronger, and give much, much more longer protection than what we have today, as well as, pretty remarkably, all of our cancer stuff. So bladder cancer.
And Joe, I think people need to have an understanding of this in dollars and cents as to what this deal means. The biggest problem for small biotech firms, and it has always been the problem, that it is very expensive to continue to fund this type of research and development. And if you wanted to, even at this level, 46 cents, 47 cents, if you had to raise 5 million, a million, 2 million, 5 million, you would be diluting this company so dramatically that it would hurt the shareholders, even though you're bringing in money to sustain the business. And so what happens here is if you wanted to raise $1 million right here, let's call it $0.50 just because the numbers work a little easier, you would have to sell probably 3 or 4 million more shares to the public because they have to hold those. And so they get them at a discount. And that's just $1 million. If you had to raise, and I don't know what your budget is, but I'm sure it's well in excess of 5 million. The advantage here of not diluting your shareholders by, I don't know, a couple of 100% by adding that kind of share count, that is really probably the most important thing that you've said here, because you're doing these gene-based oncology projects. You're doing all of this stuff, and you're not hurting the shareholder. In a lot of these deals, the shareholder becomes an adversary of the company, and that is just not happening with Generex.
No, I mean we've let's call it, we've learned our lesson. It's the players that fund OTC companies on this level are not your friends. They're there to get as much as possible out of the stock that they can.
And they ring the register immediately.
Yeah, and they disguise themselves as investors, but they're really convertible note guys that all they care about is just keep getting more and more and more and more, and they bring it all the way down because they don't lose, and they hurt the company.
And I'll go a step further and tell you that I have seen little companies like this that have trouble raising money, and what happens is they go to their prior funding sources, and those guys actually short the stock and pressure it to the downside. And then when they do the deal, they know that they're not taking any risk here because they know you're going to have to do a deal. It's going to be under the market. And they're going to be, come riding in on a white horse and say, oh, yeah, we'll take as much of that as, you'll give us. The fact of the matter is they've sold it already and they're getting it at a discount. And, that's just the name of the game in little companies. And it's really great to see you moving out of that.
Well, I mean, Generex has raised well over $450 million over its time. So, it's not our first dance. We have enough shares out now, about 109 million, where we can manage our security structure pretty well with execution as well as our deliverables. So, China means $65 million in upfront payments on the first 3 contracts we signed. We're dealing with, I would say, the top folks there, including the CDC of China, who is also a partner. So, for us, $65 million will go a long way. That's all in licensing payments. There will be additional contracts that we will be disclosing soon that will bring in other substantial revenue with China, as well as the Malaysia deal where they're paying for everything. So pretty much we won't have to go to the market to raise.
Yeah, that's a home run setup.
Yep.
Joe, does every one of those countries that you're dealing with have kind of their version of a CDC?
They do. Each country really has their own version of a CDC. I think it's very important that governments have that in place, and and they're all highly active right now because everybody's trying to figure out the best way to protect their people. So, for us, it's an honor to be working with their, CDC equivalent to here. Their folks understand our technology quite well, and they appreciate the technology. And for sure, they're going to put in a lot of money. I mean, a significant amount of money in research in all the areas that we could only wish we could go into and had that kind of money to, go into 10, 12, 15 different areas all at once. So for us, we get the data. We'll have ownership in the entity there. And we have big revenue streams. Once these things get approved there, they'll bring in significant money to Generex. So we're quite happy about it.
So will it be faster for me just to go to Malaysia and get your vaccine than it would from the state of Florida? I'm sorry.
Well, no. The beautiful thing is that we'll make it here. We'll ship it there. They'll distribute it for us. So, they're paying for us to get approved here in the United States through the FDA. So for us, that's a double win for us because once it's approved here, it's a lot easier to get approved there. And then their licensing rights will kick in and they'll be able to distribute it and, provide we believe is a very big solution to their people.
How many vials, if you will, are you even talking about?
Well, I can tell you that we can make an incredible amount. 1 billion doses does not take long or it's not complicated. We're also a non-refrigerated product or frozen product. So we believe right now, based upon all the testing that we've been doing, that our vaccine will be room temperature. So we won't have the issues that all of these mRNA, RNA companies are experiencing because we'll be able to just pop it in a pouch and get it over to where it needs to go that day with a significant shelf life, where these, highly frozen vaccines that are being produced right now cannot do. So we have huge advantages over these mRNA, DNA, and RNA vaccines.
Wow, that's amazing news. That's incredible.
Well, now you know why the stock has doubled in the last 4 days.
Yeah, no kidding. No kidding.
Well, we haven't had significant news that come out. We will be having a shareholder conference call on February 5th. We're going to give a complete wrap up on where we are with the vaccine. I mean, I can tell you that we've done significant testing. We've done much more than we had anticipated doing. Right now, we have the last big test that's going on that by the end of the month will totally prove out, we believe, our vaccine as being the safest, most effective. But the big thing is the long-term memory, where you're constantly not getting vaccine, every 6 months to a year. That's the biggest thing, especially with all these other vaccine manufacturers using the full spike protein. And we do know that in that full spike protein, there are 1,791 bad guys. Those are called non-neutralizing antibodies. So those non-neutralizing antibodies are the thing that create are the things that create off targets. Bell palsy, which we're seeing now initially, which is they're paralyzing your face. Will they all recover eventually? Sure, they will. Could there be a chance that some won't recover? Well, yes. Look at the side effects that are going on. The big thing right now is not when you get inoculated, it's 6 months to a year from now. What are these gene therapies doing with those 1,791 non-neutralizing antibodies building up very bad protein, which eventually, my fear is, will the body, your own immune system, go after those 1,791 eventually, where cytokine storm, cytokine blitz, or another half dozen other type of autoimmune responses will kick in, and then getting vaccine again, because you may need it to get it again with these mRNA or DNA vaccines. So you're building up protein, then you could get COVID even with these vaccines, building up those 1,791 bad guys again. And that's when the immune system will really start, potentially ravaging our own body and attacking it because of this bad protein buildup. And no one's talking about it. No one is talking about it. It's just amazing to me and my team. I mean, if you take a look at NewGenerXIO.com, take a look at the team that's behind this vaccine, and you're talking the best of the best. So it's just incredible to me that no one is talking about these things whatsoever. It's starting to come out, but these are the things that we believe make us exceptionally different than what's going on. And at the end of the day, everybody needs to realize that everyone delivers the same thing, peptides, whether it's through a gene therapy pathway to deliver those peptides, a DNA pathway, or an RNA pathway, and us being IIK pathway. That's our technology. We all deliver simple peptides. They just deliver the full spike. We deliver the best parts of that spike protein, the safest parts. We are only neutralizing. We have no bad guys in our vaccine. So there are no non-neutralizing antibodies. We also don't give any Th2, zero, and they all give Th2. And these are all the bad things that could eventually go wrong over time once these vaccines are in us.
Joe, what's the Th2?
Th2 is how it expresses to the cells, and those are the things that create these off targets, and these off targets are the things that get you sick. So again, it's not about when I get inoculated. It's about, will I get COVID with the vaccine in me? So I'm building up more protein, those 1,791 bad guys.
Hey, Joe, I commend you.
Proteins are a big issue with your liver and your kidneys.
I guess I can't talk now. Joe, could you hear me?
Yes. How are you?
Well, I commend you, Joe. I was fortunate enough to have Linus Pauling as my client at Stanford. Did he tell me about vaccines? Do you know that one of those vaccines has some antifreeze in it, but they're disguising the name, because it has to be kept so cold? And then about the cholera that took place with the polio vaccine in the Midwest during the 1950s. Many of the children came down and became paralyzed. So I really commend you for doing, this is so important, not making money, doing what you're doing.
Well, listen, we believe that we're going to be the best solution based upon what we're seeing already. I think we will shock, our industry in terms of just how good this vaccine is. And this last big test that we're conducting right now as the complete vaccine, we've trademarked that name because we are a complete vaccine. We're safe, completely safe, because we're peptides and amino acids. So it's simple. We don't deliver through gene, changing your cells or altering cells to get those peptides into you. We are safe, we're effective. We've proven that with our 10-year breast cancer data, which was exceptional, just recently came out. And the biggest thing is, all indication is through all the tests that we've done, we will give that CD4, CD8 T cell long-term activation, which is highly needed with the vaccine. So we're not getting them over and over and over again.
Joe, you mentioned it's a room temperature type of vaccine, unlike the one that especially is major freezing. That I would think, especially in the third world countries, sort of like Pennsylvania and places like that, I'm just kidding, but that would really be an advantage.
It's a huge advantage. Plus, we're able to make, 1 billion doses very, very quickly. So for us, again, once we come out with our data, I believe we're going to have, a huge amount of not only credibility, but for sure, visibility. And every single country in the world should have a pandemic preparedness, initiative set up. And this vaccine, because this type of vaccine technology is quick, it's easy, it's cheap, it's affordable, and for sure, it's safe. And so far in all the testing that we've been doing, it's effective, and effective by long-term memory. And that's the key here, because you do not want to get 1,791 non-neutralizing antibodies, whether getting COVID or taking vaccine over and over and over again. That's where I see the real problem later that's going to occur. It's not about getting the vaccine.
Doesn't the buildup of proteins is a pretty major issue for your liver and your kidneys?
Well, think about it. We are all protein.
Right.
The virus is protein. So, it's just the breakout of those, there's 1,800 there's 1,800 antibodies that are derived after you get COVID in the body. 1,791 are bad. 9 of them are good. They're called neutralizing. Neutralizing is the key. So if any vaccine does not have neutralizing properties in it, as on the other side, meaning you have the full spike protein. So out of 1,800, 1,791 are bad, 9 are good. If it was the other way around, then these vaccines would be great. But it's not the other way around. It's 1,791 against 9. So, the hope is that those 9 neutralizing antibodies do their job, and some way, somehow, the other 1,791 are not recognized. But if they keep building up because of getting COVID or getting vaccine over and over, they will eventually be recognized. And the problem there is that's when the off targets will start hitting.
Pretty amazing.
Yeah, that's incredible. It really is.
Isn't it? Charlie, remember we went over this with all the potential downsides with the other vaccines?
And Joe, what's the difference between the current company Generix and the new company New Generix, NU Generix?
Well, New Generix Immuno-Oncology is a subsidiary. We've owned that company for many, many years, well over 10 years. That's where all these assets sit, this technology sits. And, we've spun that out. It's a public company now. We still own about 91% of that company. So it's a majority subsidiary that now is public. And we're looking to get that traded, that public company shares to be traded soon, very soon in the market. By evident bias, we applied for our NASDAQ listing. We put that application in, and we've been doing all the necessary work to get those shares traded on the NASDAQ stock exchange. So we have a little bit more work to do. We've made a lot of headway in being able to pull the trigger on that. And we're hopeful that within the next very short time, 30, 60 days, we can get this thing trading and make our shareholders happy, as well as build
So
value.
are you giving that 9% that you were talking about? Are you giving that to existing Generex shareholders, spinning it out, or?
Yeah, we've done two dividends to our existing shareholder base in Generex.
Yeah,
And so that 9% is held by those shareholders. And we were happy to do that because we believe NGIO, New Generics Immuno-Oncology, will be highly valuable into the future, which will unlock its value by going, when we took it public, but more importantly, when the shares trade and we're able to have our shareholders realize that value that we created for them.
great. Well, it's a really exciting story, and it's really nice that it's beginning to, kind of come into its own in the marketplace. It's just been an amazing move. And while I assume nothing goes straight up, it will probably consolidate again before it moves higher. But, the news could not be better, obviously.
Yeah, I mean, we're very excited about this conference call on February 5th. And we believe we have a real home run here with this vaccine. And it's a real solution that's really needed. And we can deploy that very, very quickly once we get the necessary approvals to do so. So we're very excited about it.
And from the legal side, I want to say that while we did have a contract with Generex before, we are not being paid for this, and I am a shareholder. So there's my disclaimer to keep it all legal.
There you go.
And I think what we'll do, Joe, for you is we'll get a copy of this and people can archive, you can archive it on your website. And I will put it in my Discord room and on my website. And I know that Greg will use the WPSL where I put my pre-opening and closing comments. It'll also go there. So there will be many ways for people to listen to this and get the full story on what GNBT is doing.
And also, they'll be able to see those charts on WPSL TV as well on YouTube. So that'll be up later this afternoon. So, Joe, an amazing story. It just the news keeps getting better and better. That's awesome. So,
Well, thank you. And we really appreciate that. And we believe, again, we'll have some great news come February. So very exciting stuff we're doing.
All right. Well, David, Charlie, what a show. Amazing stuff. Very important news as we are still fighting COVID-19. This is WPSL. With the world on Alexa, Google Home, and tune in worldwide.